Hello, welcome to FountainFX on Thursday the 12th of June 2014. We are looking at the Euro US dollar on the 15-minute chart. If you remember yesterday I planned a trade based on support down here at the 135.25 it was. So if I just slightly move this line here, this is just showing you that sometimes it doesn't work to your plans, and this is called how you therefore start to adjust your trading style. But just to go with it, that's fine. If we look here, I took a buy order at the 135.25 down here. We can see that at the end of play yesterday it almost got there but didn't quite, and then it almost got there again and didn't quite, and pushed back up. And then this morning what happened was European opened from this nice area of resistance, fell all the way down to this level and finally triggered me into the trade on this candlestick here, turned and rallied in my favor, so it looked like everything was going to plan, and then it promptly turned and went against me. So one of those things, but the point is that you have a managed risk. So therefore the area between these two lines was my risk, and look, one of those things just got taken out just on this wick here, and then price has now turned and rallied in my favor. So one of those things. Sometimes there's certain traders out there that trade without stops. I do not recommend that. I think while you're learning, use the stops, try to identify bands of risk, but also look for extreme areas of entry. So if you think about it, it didn't come to my entry point here and it didn't come to my entry point there. Therefore, potentially I could have taken the order off, could have taken the trade off, but at this point I was looking profitable, it was looking like it was going in the right direction, only to turn and continue down. So that's the pros and cons of trading. Well, that's the con of trading. However, in the process, that was a swing trade that was planned. In the process, we had the typical European Open trade, which is we'd got this head and shoulders pattern formation that had happened in the Asian market overnight, and then as it neared 9 o'clock, actually at the 9 o'clock, we had this nice candlestick form at 9:45, well at 9:30 it was when it opened, and it rallied all the way up, and it pushed with momentum all the way up to this area of resistance, and then it closed just a little bit below. If you go into the 5-minute chart, you can see that the actual close of the candlestick was right on this resistance area. So it is a natural thing to say it's come straight up into resistance, it's come with momentum, great opportunity to sell, and therefore took a sell order there, just below, I think it was 135.44 I got filled at, and price then fell, and I took it all the way down to my entry here at the 135.25, so just under 19 points of trade, and I was out because obviously I was looking at the swing trade, which is going the opposite direction. So despite the fact that it went 10 points against me, I took 20 points as price fell, or 19 points as price fell. So it is about looking at the opportunities and seeing when they set up, and as we can see here, that actually that wasn't that bad a planned trade, just a bit unfortunate that price has pushed further into my area of risk than I anticipated, only to then turn and go in the right direction. Now the one thing to note now is if we look here, what have we got? We're up near resistance and we're having a double top formation happen. So we have to wait until this red candlestick is formed, and then we could potentially take a short from here. And if we take a short from here, I would place my stop just above this area of resistance and see if that's another great entry. The thing is that what we're looking for is we're looking for high probability entries. Doesn't mean to say it's zero risk entries. They will, the market can still go against us, as we've seen here. However, I've only risked 10 points, and I was looking to get at least 20 points. If not, I was really looking to get up to here. I was looking to get 30 points out of the trade from a 10-point risk, so 3 to 1. So it's looking at areas of resistance and areas of support. And if you see, I wasn't really that far off. Unfortunately, price is now, if I was waiting for price to get to the 135.55, I'd be probably in slight bit of doubt here with this double top formation happening. So anyway, that's it from FountainFX. Hopefully you've picked up on some good tips here, and it will help you improve on your trading. If you're not making it happen right now, don't worry about it. That's the reason for FountainFX. You haven't spent $5,000 on a course and not realized how to trade yet. The point is, it's low cost. It's about practice, practice, and practice. It's about looking at the market and seeing what happens. It's about identifying the errors and the mistakes that you're making and overcoming them. See, look now. If we look at that candlestick, previously it looked like a double top. Now it's pushing up. If that candlestick closes above here, it's no longer a double top, is it? It's going to push. It shows that prices continue to push up. So we always have to be aware and let the candlesticks close before we can make a decision on where we see price moving. So that's it from FountainFX today. Happy trading. We will catch you tomorrow. Bye bye.